that you're going nowhere. Don't blame me for what you've done, 'cause I know that you are having fun.
Welcome to the Clarified Realty Podcast, exposing the real estate secrets your agent doesn't want you to know. Here's your host, Tom Clary.
Well, don't you just walk away. That's when I'll say.
Welcome to the Clarified Realty Podcast. I'm Tom Clary. I'm your host. I'm a real estate agent here in beautiful Southern California. I'm here with my co-host, Ron Bruno. Ron, how you doing today?
I'm doing great, Tom. Thanks for asking.
Hey, I'm doing all right. How you doing? You doing all right? Yeah, we're doing okay. We have a great guest today. We're going to go right into it today. Our guest for today is David Duley. He's a serial entrepreneur and author of the book, I Can Fix America, 52 Common Sense Ways You Can Make the United States Great Again. It's available on Amazon. And he's also the host of the Controversial Truth podcast, available on iTunes and Stitcher. But the main reason we have him here today is to talk about his time in the trenches as a real estate investor. He's been investing for going on 13 years and has a lot of really incredible advice for us about what it's like and how to get started. So, David, I really want to thank you so much for coming today.
It's great to be here.
Well,
awesome.
I know. Welcome to Southern California. You're actually Atlanta guy
Well,
now. You're from Flint.
I'm from
We're going to
Flint
get to
town.
that.
Absolutely.
We're,
real estate's cheap up there right now.
Just
when
a
you
bit,
can't have
right?
water, real estate's cheap.
It has a tendency to bring down property values.
Right.
But yeah, well, let's take a little step down memory lane here. I mean, just looking at your background, I mean, you came from Flint, Michigan. That's where you started.
Yeah, that's where it all happened, man.
Wow.
So outside of my gang, once I got out of the gang, I'm just kidding. It wasn't that bad.
Or are you Crips or Bloods? No.
We were a new version.
Yeah.
We were Union.
You were Union, AFL-CIO. Right. So how long did you stay in Flint?
So the first 18 years of my life, and then so still have some family up there, and then I decided to go to a school in Atlanta where I met this guy.
Yeah,
over
Ron.
here,
That's
Ron
right.
Bruno.
So for context, Dave and I, we were roommates
We're
in
dating.
college, right? So,
I have a sense there's intense shenanigans going on.
oh, you don't even want to know.
That dorm
You don't want to
room.
even know.
Yeah.
Yeah.
I do.
I'm a beer and a half in, so
Yeah, right. We're at WeWork
we'll
again.
see where this goes.
We're at WeWork again, where beer is on tap and the lips are loose. So yeah, but you met this guy.
Yeah. We were in the same dorm, freshman and sophomore year.
Right across the hall in Hagen.
And then we actually shared the same house, four of us, junior, senior
That is a
year.
sitcom that I would watch
exactly.
every week.
I drove by the house.
Did you?
Yes. Still looks all right.
It was what?
Really?
There's some memories in there.
1908 North Decatur Road.
Yeah, that's right. Wow.
Yes,
Tree fell on Ron's car one night.
It's true. Yeah, it was the Golden Bullet.
Jeez.
My parents, they had, what was it? It was like a
No, you had
1990 or
van.
what?
You had the van.
Yeah, it was the van, the Golden Bullet.
Yeah.
Yeah. So it was a
Chrysler van.
Town and Country Chrysler.
Yeah,
and what
that's
was really
nice.
funny about that was, so my brother, he's a drummer, right? So my brother's in Atlanta, and he's carting around all of his buddies and all of his band equipment, and I was able to convince my brother that he really needed the Town and Country, and I needed his Land Rover.
Of course.
It works that way.
So, I mean, surprisingly, it worked. So,
Yeah.
yeah. So, senior year, I was driving a much cooler car.
Well, there you go.
And then it broke down on me many times. So, yes.
Well, that's what Land Rovers do.
That's what Land Rovers do.
You break down and on dark roads. It's
Right.
not necessarily a bad thing, You're just like, hey, honey, I'm sorry. That's
I'm
car's not
sorry.
moving.
It's the British. They can't make a car. It's not my fault.
Blame the British.
That's right.
So, but there you are in Atlanta, and you stay there.
Yeah, I did. Yeah, I graduated, and then I went to work for The Man for about 18 months of my life.
V-Man.
The Man. And then actually worked in kind of investments through American Express. And that was my only job I've had my entire life, knock on wood.
Wow.
I became an entrepreneur at 23 when I wrote a business plan for an internet-type company. And ever since then, I've been trying to figure out what I want to be when I grow up.
Yeah, you and me both. Yeah, I mean, it's, I'll tell you something. It's, in looking at your resume and kind of looking at back, geez, all that you've done. I mean, you kind of have had this kind of this life, this entrepreneur's life, where you've gone and you've started companies, you've invented things, you have your own restaurant.
That's true.
And all that, and it's kind of. But one of the things that we really wanted to kind of zero in here, though, is that you have quite a bit of experience in terms of real estate investment.
It's true.
And the audience that we have here, it really has a lot of. The way that we've approached this is all about getting the information of how to do it out to people so that they kind of get over their fear. Now, there's the people who are, just the general people looking for a home.
Sure.
They're just out there. It's like, hey, Tom, I just want to buy a house.
Right.
Shelter,
we need that.
Shelter, we all need shelter, food, and water or whatever.
Right.
Yeah. But then there's that next level. The people who are looking to, they'd love to, they hear stories of people flipping, or they hear stories about people,
Yeah.
and they just want to step that next step.
Sure.
So I think it might be really helpful to kind of hear how you started in terms of moving into doing that kind of stuff.
Yeah.
And what advice you would give to folks who would be kind of thinking about making that jump.
My thoughts on real estate have massively fluctuated over the years.
With the market?
With the market, ironically. I've always been bullish on real estate, and my involvement in real estate does stem from being an entrepreneur, and simply because there's so many things that I've done in my life that take 6, 8, 12 months to see or feel or touch, that real estate gives me the instant gratification of being able to know that it's there.
Yeah, right.
Right?
And you can go around the corner and,
exactly.
oh, look, I'm knocking on the door. Yeah.
And so I bought my first house in 2002, my primary residence, and then I bought my first investment piece of real estate in 2004.
Okay.
And I am really a buy and hold kind of guy. I've only sold 3 houses, and I've probably bought 20 of them. So
that's actually really fascinating, because I think a lot of folks, what is your philosophy behind that? Because I know that for me, I always tell the folks I'm a buy and hold guy too.
Sure.
I mean, because market does all sorts of things, but if you hold it, it appreciates.
Well, yeah. My philosophy on it is twofold. I don't want to pay taxes, and so I was able to buy a lot of these properties at excellent prices. So I'll tell you a little bit more about the timing of really when I got in bigger into real estate in a second. But ultimately, my drive is I don't want anything I own to own me.
Right.
Okay? And so it's a famous quote out of the movie Fight Club. There's a bar scene, and I quote it all the time on my own podcast. And so whenever I make a purchasing decision, I always say, is by buying this asset or toy or whatever it is, does it make me feel like it owns me financially somehow? Right. And so as I wanted certain things and luxuries in life, I said, what can I buy that if I nurture it and invest it, in make it nicer, can yield to me the cash flow to pay for the things, as an entrepreneur, so I have some sort of stability. Right. So as I do some of these crazy ideas, I have this kind of constant cash flow in my life that covers the basics. Yeah. And so that was really the genesis of me getting into real estate. And so as someone that buys and holds, I say things like, if I want to drive this car and there's a payment for this, I need to go buy something that yields that amount of
generates
cash flow.
That exactly right.
So
that payment.
That exactly
right.
And so as
so smart.
Those things changed, I went out and I just started using the assets, because as an entrepreneur, I've had some hits and I've had some misses. Yeah. But luckily, I found myself selling a company that I started, in which a product I invented, really during the chaos of 2009. And so here I found myself like not knowing what to do with money, but knowing that here's all this real estate now in 2010 that's selling for what it sold for 50 years ago, 50 years ago, right? And being held by Fannie Mae and Freddie Mac. Mm-hmm. And so I just went on a buying spree. Yeah. And I did it with my money. I did it with my friends' money. I did it. There's tons of people private investors that want to give me private loans when no banks were doing it.
Throw money at you.
There's nothing, because they couldn't get anything, right? But they knew kind of our philosophy was very simple. My business plan is very simple. If I'm paying what someone paid 30 or 40 years ago for this price, and we get screwed, then who cares about money?
Right.
We're all screwed.
Right. Totally. No, it's
Really?
true,
I
right?
mean,
The
and
system has
so-
collapsed.
The entire system.
I have that loan.
Right. And so that was the philosophy. And then we accumulated a bunch of single family homes in areas that I thought would appreciate and have. And the rents have, we all know, has become ridiculous.
absolutely.
And so it's been good to be a landlord.
Absolutely. And, I think that, I'm sorry to interrupt you, but
No, go ahead.
there are some folks out there that I think that the biggest fear that they need to overcome in terms of getting into investment real estate is that idea of, well, what happens when somebody moves out? And I think
I have that right now. I have
Yeah,
one
do-
vacancy.
really?
But I mean, that's part of the deal.
But you've got one vacancy out of how many that you,
Yeah,
I mean.
17, I think.
Right. So basically you've got 16 that are generating.
Right.
And one, what do you, how did you get over that fear?
Well, that tenant was there for 7 years.
Yeah.
So that helped.
Yeah, right?
So I have Patty,
Yeah.
and took good care of it. It literally just went back onto the market about a month ago. So the carrying costs you have to figure in. And so this is the interesting part about timing. So if you came to me and said, would you buy real estate right now?
Yeah.
Would you investment real estate? I would say, I'm not buying right now.
Right.
Because I believe in cycles. There's a book out there that's called This Time It's Different. And it's never different.
Right.
Right. And so the economy, if you track it back past 100 years, you'll see the ebb and flow of the boom and bust economy generated by the Federal Reserve. We can get that tinfoil hat on if you want later. But I'm just I don't want to be smart, think I'm smart anymore. I just want to look at what the trends are and try to play off the trends.
Yeah.
And so as I'm not a buyer now, I'm more of a seller,
Sure.
if that makes sense.
Well-
But I don't sell. I've only sold once. I'll tell you, this is the story that everyone kind of hears about and why they want to invest in real estate. But literally, I went into a house. It was listed by Fannie Mae during kind of the real estate chaos. It was in a zip code that had an historic section and a very bad section.
Right.
Same zip code though, but the servicing bank, Fannie Mae, didn't know.
Right.
They priced it like it was in the really bad part.
Sure.
And so here we are. I went in. They listed it for a price. It was the first time ever that I walked in. I'm like, I'll pay full price.
Wow.
Because I would always mess with the banks, especially
Yeah.
at that time, because we were
Fiddle
all
around.
cash buyers.
Negotiate.
And it's like, take it as is. We'll buy it in 10 days or whatever.
Right.
So I closed on that property on a Friday at 1 p.m. Same Friday at 3 p.m., the agent that sold it to me calls me and says, I'm out showing real estate in this neighborhood that you just bought a house in, and this woman who's an all-cash buyer is retired and her daughter lives in the neighborhood, and the house she really wants is the house you just bought. Would you sell it? And he gave me a price that was probably 40% more than I paid, because obviously he knew what I paid.
Yeah.
And I said, no. And I gave a price that was 100% more than I paid. So let's say, for simple math, 100,000, then I said it would be 200,000. And so we met out there at 5 p.m. and I had a contract on it at 5:30
Wow.
for double.
That's crazy.
Damn.
So, people always hear that and it's like, I'm going to find that one. I've
Yeah.
never found another one. since,
Yeah, no, right.
Nice.
And
It's the unicorn.
It's the unicorn.
And the real
so-
estate you were buying, I mean, it was basically like every single ATL, rappers, where they're talking about East Point and College Park and
Right,
all that.
yeah,
So, yeah, I mean, it was taking a risk back then, right?
Yeah, totally. Yeah, absolutely.
So, but back to what was it that got you over that fear of, oh, you know what, I don't want to somebody. I might have to evict somebody. I might have to, it might be empty. What get you over those fears? Like, did you even have them to begin with?
I did. I certainly did. I grew up in Flint, Michigan, and some people in my family had rental homes, and so
Right.
when things got bad in Flint, evicting was part of that. Even good
Right.
people that lost jobs that you feel
Absolutely.
really bad about, right?
Right.
And it's a terrible kind of experience.
Right.
But I knew that if I formed at this time, I was doing a lot of the legwork, meaning I would meet the people out there, the prospects out there, which can be a pain, right?
Sure.
I would run background checks, or I'd call their landlords, and then I would try to, look at their cars and see if their cars are a mess. There's
A lot of Bondo on that
witchcraft,
one. That guy's not coming in.
Exactly.
Yeah.
But I was generally, I think, a pretty good judge of character, and were able to find good tenants. Now, we had, the Satan worshiper once. I mean, that is a true story.
And pentagrams on the front lawn.
All that stuff, fish in the vents because they were upset about evicting. But that's only happened once. And so I've been investing. I've owned rental real estate for 13 years now, and I can only really think of one real eviction where I had to take it all the way.
Right. And when you think about that, I mean, it's kind of the return is so much greater than that pain of that.
Totally.
Everybody's got this overwhelming fear of what they're going to, because they look at almost every single person as like they're all going to do that. Right. And then that's not realistic.
Right. That's not realistic.
And then, yes, there is one or two possibly that's going to be a real knockdown, drag out thing.
Totally. And so my fear was getting to know the people, knowing that this type of investment is going to take active management for the most part early on, but that these people would be on some of my properties. I was fortunate enough to have mortgages, some don't, but early on they all did. And my philosophy again was that these people are building my equity. Right. And so when you look at that monthly payment that goes out, everyone forgets some of its principal.
Yeah, right.
Right? Some of it's reducing your debt.
Right,
too.
exactly.
And so, as a calculation of your total return, you have to always kind of consider that.
Right.
And so it's not as painful, the holding costs, as one might think. It's painful from a cash flow standpoint sometimes, but you have to kind of stay in it to long enough. It's hard to flip rental property, I would say.
Right.
The way at least I look at it. Now I know people are doing it right now, and I know, and we can get into today's market and my opinions on that if you want, but
well, I mean, go ahead. I mean, look, the whole thing is that it's one of the main reasons that you're here is because you're active, you're a participant.
Right.
You're actually out there doing it. So many people come up here and they pontificate about, and you don't even know what the hell their real experience is. You're an actual in the trenches person. So those kind of things are important. Now, I will say before we go into that, I'm just so you kind of know the philosophy of where I'm coming from. It's very much about one of the main things I believe in is that you buy the house, not the market. Okay.
Yeah.
So while I understand you're not in buy mode right now, right? That doesn't necessarily mean that there aren't deals out there.
That's right.
You just have to really look a lot harder.
And it gets back to location, right? In real estate. So even in markets which I think are super high as of right now, there are some parts of town, no matter what market you're in, that that property, no matter the cycle, is going to be worth and it's going to attract the right people to it. So I agree.
Yeah. So, okay. So, but what are your thoughts on the market right now? I mean, you definitely have a philosophy, I'm assuming.
I do. I think all good things must come to an end. Yeah. But that doesn't mean that bad things start then.
Right.
Actually, I've made the most money in my life without question in down markets.
Right.
I think Rockefeller said, buy when there's blood in the streets, or something like that.
And I think that it still boggles my mind that after the people saw the crash, right, this whole big collapse of the market, and people are still like not understanding that was when they should have jumped.
Yeah.
Everybody's talking about, I'm going to wait until there's another down. You had a fucking down. You had a down market. You had the down market, and you stayed on the freaking sidelines.
Exactly.
What makes you think that it's going to? We only have a crash like that once in a lifetime, probably.
Yeah. Like that.
Like that, exactly. I mean, there are going to be cycles where it comes down. Yeah. But if you rode the wood then, what do you think you're going to do the next time that there's some sort of downturn?
Totally. And so my philosophy, there's another saying. Maybe it was Jack Kennedy or. Who was JFK's father? Was it Jack Kennedy? Was that his name? Or whatever.
Nobody said there was going to be a test today, Dave.
Yeah, Joseph Kennedy. Joe Kennedy.
The bootlegger.
The bootlegger. That's right. That's what I remember, actually.
Yeah. The famous, and I could be misquoting this, so listeners will have to quote check me here, but of when he decided to get out of the stock market is when the guy shining his shoes started talking about the stocks he just bought.
Wow. See?
Right?
Dead on.
And so literally I'm coming back, I don't know where I was, coming back from Chicago a couple weeks ago, and I'm in the Uber.
I was going to say, when the Uber driver starts talking
the
about...
Uber driver was telling me about all this investment real estate he's buying. And he told me that he bought a property in November, and right now it's worth 4 times what he paid for it, but he thinks it's going to go to 8 times. And I'm like, my friend, if you're telling me the truth, you need to sell tomorrow.
Yeah.
I said, 4 times on your money in 4 months is awesome.
Yeah.
And I said, I don't know if you know what you're talking about, but but if that is the case, you need to do this.
Right.
You know?
Yeah.
And so everyone needs to kind of frame their expectations on how this real estate market's going to play out.
Yeah.
And so I'm helping a lot of my friends. A friend of mine has a huge portfolio of real estate, 8-figure kind of size, and we're selling it all. And the reason is we think that the environment with low cap rates, a lot of it's commercial, is because...
By the way, can you? I don't know the level of my listener, so
Okay.
just quickly
Yeah.
go into cap rates just so they kind of understand
So
what that
cap
is.
rates are basically, if a property yields X amount of income, so say $100,000 of income, it's a warehouse or whatever a year. The way you get a price is you take whatever this cap rate is, so 6%, and take 6% and divide it into 100,000, and that would give you the price
that you would pay for
that
it.
you would pay for this property.
right.
So the lower the cap rate, the higher the price.
Right.
And in an environment where we are right now, where there's such cheap money and so much money to be put to use because of all this economic stimulus, that everyone's what's called chasing yields, right?
Yeah.
And so they're trying to put money into the market to get some sort of return, because as anyone knows that has money in their bank account, they're getting nothing, or money in CDs are getting nothing.
Right.
And so that purports additionally risky behavior. And so that's why people move into assets like the stock market, then it artificially inflates, which we're seeing, in my opinion, right now, because people have to take greater risk to assume or to hopefully get greater yield or return on their investments. Same thing with real estate right now. As rates are at an all-time low, people are often payment buyers. And so because they're payment buyers, this is across the board in both residential and commercial real estate, they are like, hey, I'm willing to pay this amount, and if interest rate is this amount, then I can pay up to whatever price that is. And so price becomes kind of not what they're talking about.
No, it's so much like a comparison is almost like when you go to a car dealership, right? And they ask you, it's like, well, what kind of payment can you afford?
Right.
And it's like, oh, okay, then we'll work that out. You know, it's like,
Right.
of course you will.
Yeah,
you know,
of course, right? You can find something that will match that payment. But I'm not a payment buyer, and so I try to find the value of the right price. But most people are payment buyers, and so that's why I think we're seeing kind of crazy rates and prices right now. And so that's why ultimately I'm a seller, because there'll be another time. It always cycles back around.
Now, a really quick question: are you usually, when you do go in, and please, if this is too much, please don't let me know. But is it when you go into purchases, are you thinking I'm going to go pay cash, or do you get the loan and you leverage it?
I've done both.
What's the delineation? What's the thing that?
It depends what I have going on in my other
No,
world.
okay. So,
for me,
but I totally get that.
But
that's not like you see a certain yield, or you see a certain deal, or something like that.
because I need to make it. So half my properties probably have mortgages on them, and it certainly gooses the return from a cash-on-cash standpoint,
right?
Without question,
right?
Using debt smart is a huge, great wealth creator.
Yeah.
Right. But as Ron could talk, let's say you're putting 2% down on a house.
Right.
And you're financing 98% of it. If the market corrects 2%, you're to zero. If it corrects 5%, you're underwater. Right. What's interesting, though, is you've offloaded that risk to the bank at that point.
Right.
Where banks then, where they want you to put 20% down means that you're going to get the first 20% hit in that. And so,
Amen.
And so, if we have an environment where the banks are willing to get risky again, it's just inevitable that that the cycle, that there will be a hiccup. There always is a hiccup. And I remember right after the crash, there's this famous old banker who used to be president of Nations Bank in Atlanta, and then that became part of Bank of America. And I knew this guy, and we went to a baseball game together. And I think he has passed since then. And I said, do you think something like that what happened in 2008 will happen again? He's like, absolutely. Mm-hmm. I said, really? Why do you believe that? He goes, because everyone that knows what it took to get it there have been fired.
Right.
And so everyone new is going to make the same mistakes.
Yep. 100%.
And I was like, that's very insightful.
Ron, you had something you wanted to...
It's really interesting. So, we actually talked about this on a past podcast. You look at when people say, is there a bubble? Is there a bubble? And because the last cycle was all bought up essentially by making all these risky mortgages and all these crazy programs and ninja loans. And because we're not in that environment right now, there's there can't be a bubble. It can't exist because none of the shenanigans are happening right now. So we're, it's just going to keep going up. Well, that doesn't necessarily mean that because the last cycle was caused by something else, that something else might trigger something totally going down. It's
never the exact same thing.
But people's mind, it's so short term. They only think, well, that never happened, right? It's not like The Big Short anymore, right? So, but it's going to be somewhere else.
Well, let's throw something crazy into the mix. Ready? So, let's imagine this.
Yeah.
Mandatory healthcare.
Okay.
Think about this. So you, Ron, your banks underwrite a ratio, right? They underwrite a ratio of a certain debt-income ratio. Mm-hmm. And it's based off a standard of what's your car payment, what your credit card, student loan, and what's the price of this house.
Yeah.
So if we have mandatory healthcare coverage,
right,
and premiums go up, does that now become a factor into your purchasing power of a home?
That's an incredibly good point.
And so
No,
it doesn't, but
not by the banks.
Not by the banks.
But it does affect your paycheck and your pocketbook. Yeah.
It affects it as much or more because you cannot control that.
Absolutely.
We can clearly, you can't keep your doctor. You're not going to save $2,500. It's not, none of it is true. And so you subject yourself to people that are still maxing out the home purchases, and they haven't thought through what are these ancillary forces that are going to take a gouge out of my disposable income, and now the roof needs to be repaired, and now I don't have the extra cash flow because I just had to pay my insurance deductible.
Right.
And now this house is, you know what, but I only put 3% down, so I'm going to walk away from it.
Yeah.
Well, and as we become more of
it's true.
As we accumulate more and more of these little gadgets, they all have the payment plans, right? So you have AT&T, and then you have so you have the internet, where we didn't have that. You didn't have to pay that before, but so you have the internet, you have the phone, you have the cell phone, you have the extra Wi-Fi, you have all of these things, and as lenders, we don't factor that in.
It's that digital heroin that they need you. They hook you up, and you're constantly paying into it. And you're never.
Yeah, I wonder what what the virtual reality package is going to cost, like $600 for the month.
But it would be awesome.
It would be cool.
I think virtual reality is going to change most of the business, especially real estate.
Yeah, no, and to have already glimpsed it in some facets. I think what's interesting is and anybody, I don't know if anybody knows this, so I'm just going to say it right here. But I come from a background that is very high tech. I came from a visual effects film background, and
Tom blew up the White House.
I blew up the White House. Actually, I was part of the team that blew up the White House. That's absolutely true. And but
Independence Day. I had to clarify that.
Yeah, I didn't actually.
Now the NSA is one of our listeners.
All of a sudden, everybody at the CIA at Langley just kind of perked up their ears. But to see the kind of how it's wasted in real estate right now, and to see the potential though of how amazing it can be as a marketing tool for agents, but also, what I'm really excited about when it comes to VR and tech, and this is kind of a side, we're taking a little side trip, folks, from investment, but the potential to sit in an office and see 30 properties and see them pretty well, right? Experience them, can filter out all those ugly, bad ones that you don't have any interest in ever going to see. And it saves your client time, it saves your agent's time.
Yep.
And it's just, right now, we don't have anybody embracing it. And in order for that to kind of happen, it would really need the entire real estate industry to kind of go, okay, we're all going to do this. And but it's such a high potential. VR is, I think it's going to change almost every industry that it gets.
I totally
involved.
agree.
So moving on in terms of, so what are you, do you have a property management group? That
Now I do.
Yeah. So you used to manage it all yourself. How is that? Now, compare the two, managing it yourself versus having somebody and giving them a percentage.
Okay. So I have really good experience with this simply because I had bought a lot of older homes. Most of them, probably 90%, were 50 years or more old in age. And so based on the price I was able to buy these, I decided that I was going to renovate them pretty nicely. Not with high-end stuff, but I was going to replace most of the things that break.
You were going to make it a strong infrastructure.
Yeah, exactly.
Got it.
And so that happened, 7-8 years ago, right? And so I have very little problems because I did the upfront work of addressing the problems before.
Right.
Now I have some homes that maybe I bought in 2004, 2006 that I did not do that.
Right.
And so those homes will need more repair and maintenance. And so as someone that had, in addition, because I am from Flint, some of my family are tenants, right?
Okay.
Because the jobs left. And,
Sure.
and then they had to come down and find work and a living. And so
How is it to have family as tenants?
That's fine. It's fine.
Is it okay? I mean, I'm not going to say we don't want to name names or anything like that.
Yeah,
give you
yeah.
an embarrassing position here.
No,
because
no.
somebody might actually, one of your family members might listen to this.
No.
But but not likely.
Maybe,
Shaking his head,
maybe.
not likely. And I'm assuming also not likely. But is there any kind of extra tension there, or is it?
Sure. I mean, there's always the request for XYZ when you're like, well, you can go ahead and do that. You have a sweet rental rate right now.
Right.
Because you're my aunt or uncle, whatever it is.
Right.
But generally, so a family member that came down became my first kind of property manager.
Okay.
And then as my portfolio grew and it became kind of outside the scope of work that this person can handle, then I hired a professional management company that manages, like that long tenant I just spoke of, the one that was for 7 years. I was managing that by myself because, or my family member friend was, so we were managing in-house instead of out-of-house. But as that came online, I then moved it over to a professional management company because I just don't have the time.
Do you? I'm curious. Do you have any kind of philosophy in one way or another about someone who is other than yourself coming in, and would you advise them to do it all themselves, to kind of get their hands dirty? Do their own work, or is it better to kind of go, maybe you need like a gateway drug. You need like to get, if you're hiring a property manager puts you in it faster, maybe that's a better choice. What do you?
So I would buy a property with the economics that could support a property management company, even if you broke even for a while on that. But I would do the first year by yourself, to understand and appreciate what your property management company is going to go through, and to help you understand and appreciate sort of what it means to be a quote-unquote landlord, and to have relationships with people that live. I mean, they celebrate holidays and birthdays, and they bring new children home to this asset that you own. And so it's important to keep it up and keep it looking right and being good for them.
Yeah.
You know?
Did you have any mentors or anything like that kind of guide you through this process, or no?
I did a lot of reading. I can't think of any one person. There was a local guy in Atlanta, I don't know if you remember, Ron, a guy named John Adams, which was a real estate investor who had a seminar that I went to and kind of learned. But his whole stick was, and it got a lot of people burned in Atlanta, was buy homes, finance them, and then refinance them 7 years out for as much as you can, pull the cash out tax free.
Yeah.
And then everyone did that, loaded up.
Yep.
And then guess what happened? The bottom dropped out, rates went up, and now all those investors got left, getting foreclosed on.
Right.
Or having to bring a ton of money to the table.
Right.
But I wasn't in a position kind of when that was happening to buy a bunch of real estate. And so really, luckily, when I was in a position, it was right after the crash.
Right.
And so...
Did you do most of it after the crash, or did you do
most
any
of it.
before?
Yeah, I did like three before, but almost all after the crash.
Got it. Ron, did you have something you were kind of...
No, I was just saying, like in 2000, they had those 2 and 28 loans, right? So
Yeah, exactly.
you go ahead and, for the first 2 years, you had the pick-a-pay. Like,
That's right, exactly.
I want to go ahead and pay. I'm going to pay $200 on this mortgage this month because I'm going to Vegas this weekend.
Right.
So you had those loans where and the banks, they said, oh yeah, refi, no problem. Once you get past that 2-year point, it's not going to be an issue. We'll just refi you. And we'll just go ahead and extend the term so that you're constantly paying this 2 and 28. But the problem was when the bottom fell out and the values went down, people then had to pay the principal and interest, and they were out of that interest only period.
Right.
And we've talked about the HELOCs, right? The home equity line of credit,
right,
where those are now becoming a big issue because now they're resetting.
Totally.
Right. And that's a huge issue. So you have to pay attention. And, it's kudos to you, Dave, that you didn't fall into those traps, back in the day or, even along the path because you just use common sense.
Well,
you have to put that in the equation. You have to.
I have a very specific story. One of the 3 that I bought before had a mortgage on it. And I remember refinancing it maybe in 2006. And the guy was like, do you want to pull $50,000 out of it? And I'm like, yeah, that sounds interesting. And then he's like, well, why don't we just do like a 5-year interest only variable loan? And I'm like, and rates weren't that bad then. And I'm thinking, why would I do that? I was thinking like, why would I expose myself to that kind of interest rate risk?
Yep.
And I didn't. And then 2008 and 9 happened. And, here's a plug for Ron's business. I mean, if you have a variable rate right now, now is the time.
Yeah, absolutely.
I mean, it is not going to get any better.
No.
And so it's probably not going to get any better I'm 41 years old, in my lifetime. Like,
Right.
I can't imagine an interest rate environment getting lower than what we're at right now.
So while we're kind of here, what do you kind of put your Nostradamus hat on, and what do you think in terms of where we're going to go, and what do you think investment? Let's kind of let's talk in general about the real estate market, but let's also I want to kind of lean towards what would you be thinking investment wise, like
for real estate?
Yeah.
Whew.
Big long sigh.
I think we're near the top. I think we're going to get close to a correction in the next 18, 24 months. I think people are going to inevitably freak out because most of the only currency, if you think about it in America, is confidence.
Yeah.
That's really the only, it drives consumer behavior. We're a consumeristic economy. It produces 85%, I think, of our GDP, consumer-based behavior. And so people are going to be like, holy shit, it's happening again. Mm-hmm. Now, the problem with that thinking is the fundamentals and the stability of the financial markets might not be in such disarray. But if enough people believe it's in disarray,
right,
it becomes in disarray. And so that's my concern. My concern is that we'll have a normal correction. Part of the philosophy, we live in fake news land, so who knows what will be talked about and what's really going on and what people will believe, because clearly there's like no one knows what's going on. I mean, we can all admit that. I mean, I don't know. I have a political / podcast, and I can't tell you what's going on.
Right.
And so I think there's going to be a lot of deep concern. I think if unemployment rates go up, prices of homes will go down. I know that, often follows interest rates, but I think confidence, if you watch consumer confidence level, if that starts shaking and dropping, that's when things are going to get scary. And so for someone like me, I want to live way below my means, always. Right. And so I want to squirrel away money. Like, I have friends that are exceptionally smart, and they're in the finance world or whatever, and they come to me about real estate investing and have like, should I buy this? And I'm like, so let me see if I understand this correctly. You're in a bidding war for a house for $800,000, and in Atlanta, that's a big.
That's a mansion.
That's a good house.
That's a really nice home.
But you wouldn't touch this house for $400,000 4 years ago.
Right.
And so tell me, you're buying at the height of the market, and so it's almost like, and I've always done this with my life, and it's served me well. You want to be counter to popular culture. So if everyone's in the stock market, you're going to have to be like, should I be getting out of the stock market? If everyone's in real estate, you need to think, why is everyone in real estate?
Yeah.
If everyone wants to be, if your Uber driver is giving you advice on real estate investing, you might want to think about, maybe it's time to get out of real estate investing. But real estate investing is not just buying, it's also selling. All investing is buying and selling, and knowing when to hold them and knowing when to fold them. And so if you're willing to play the game and understand the cycles, in my opinion, the cycle now is to sell, is to squirrel away dry powder, is to start lining up capital sources of wealthy individuals that won't have places to put their money when there's another downturn. The banks are going to be reluctant to loan to investors, even as they kind of are now, ironically, because they brought that cap in that you can only have 10 mortgages or something like that, Ron?
Right.
I think. For investments, and it used to be 20 or 30, and that's what got people overextended.
Yeah.
But make money on the downturn on the buying side.
Right.
You know? And then have that buying side, that asset that you buy at a low price, have it pay for your primary residence.
Right.
Right? And then maybe try to buy that on the low side too. I used to be a huge proponent of owning your own home. Right? And if you look at all the data charts, owning your own home is one of the greatest things you can do to build wealth.
Right.
And that is true, right? But it depends on when you buy that home.
Sure.
So, and what your terms are when you buy
is
that
it
home.
necessarily when you buy it, but how long you're going to hold it for?
Yes, even more, without question.
Yeah.
So if you buy something and this is going to be your forever home, it almost doesn't really even matter what you pay.
Right.
But if you think you're going to be out of it in 5 years, you really need to think about, when you figure in agent commissions, what a downturn in the market could do to your equity, if it makes sense. And so my first job was like in the investment world, and I ran into the guy that hired me, and he read about me in the newspaper because I won this silly award in Atlanta, and he reached out to me. He's like, let's grab lunch. And we got lunch, and we were talking about homes. He lives in this ridiculous mansion in Atlanta. And he's like, you know what? I never thought I'd say this, but I don't think I want to own a primary house. And I'm like, what are you talking about? He goes, it just takes money away from me. I pay for it. He goes, I just want to own things that make money and let that pay rent wherever I am. So it's interesting, as a country, we're seeing this massive inflow of rental property.
Right.
But we're seeing this huge spike in rental price increases. And so is that philosophy taking hold as well? So it's an interesting theory.
And let me just kind of throw my kind of ideas about this in. And just in terms of what I'm kind of seeing out there, I think that, and we've talked about this on previous podcasts, and that you have kind of the millennial generation, right? And what they went through when the crash happened, 2008, 2009. They saw their families.
They went through prom.
They went to prom, right? No, but definitely, right? Because it was right that perfect age. But it was also this kind of formative time for them.
Totally.
And they saw their families or their friends' families marched out of their homes
Totally.
with boxes.
Yep.
And so there's this real emotional fear that they live in when they think about owning a home.
Totally.
And to I think that might also be what could possibly be. I don't even think it's possibly. I think it has a lot to do with why we're seeing such an increase in rental rates, because nobody wants. There's too many renters out there. I mean, that's the supply and demand thing.
Yeah, totally.
That's there. Nobody wants to think about buying now. It's even though, think about it. Right now we've got interest rates, even though they're starting to crawl. Well, they went down, right? I mean, last week.
Yeah, they did, and they've actually been down all week. I mean, we've now touched 230, so it was 239 on the 10-year, and
but still historically,
a couple weeks ago it was up to 260.
Historically low, and for the time being, things are still inventory is so low because people are. They're like looking at it and going, oh, I don't want to sell because where am I going to go, basically.
That's my position.
And so what you have is this kind of stalemate happening.
Right.
And so, but if you really looked at it, though, in terms of buying things like a forever home or buying like some sort of long-term residence, I think now would be a good time to buy if you can find it, because your cost of money is still incredibly low. And for the time being, things are going to keep climbing. There is that stalemate.
Totally. And so this, and I also think it's who you are as a person and what your career paths. So if you're an attorney and you're going to stay at the law firm, or you're going to stay in the general area and you're going to go through the associate and vice associate, whatever, and to eventually partner, and you know that that's the process in life that you're choosing to live, that's one thing. If you're an entrepreneur like me and you come up with crazy ideas every other day, you want to be a little bit more flexible in what that means from your financial situation. And so I just think and what we've seen in this quote unquote sharing economy is that people, I mean, look where we are right now.
Yeah.
Right? This is a great example of not wanting to own something. It's wanting to rent space that it would take 10 years ago, you'd have to build $1 billion company to have an office like this.
But just a philosophical thing, and I kind of knowing something about your leanings, this is going to be incredibly an interesting for me here, but
give in, Tom, give in.
I know, I'm going to the dark side.
Let's do it.
But don't you feel that there's going to be a huge gap between the haves and the have-nots? Because there are WeWorks does have owners. There are people who are owning those apartment buildings. There are people who are owning those homes that people are renting from. So somebody's taking advantage.
Totally.
So, I mean, why wouldn't you jump into that if you want? Isn't there?
Sure.
I mean, land is scarce.
So here's my very big philosophical answer to that.
Love it.
I can live off of 1% of $1 billion. I can't live off of 1% of $10,000. So you have these massive corporations that are able to go in and buy at the scale to yield the type of cash flow that can create and sustain a business where the average person cannot.
Right.
It's really
at least in this economic atmosphere.
In this economic atmosphere.
Well, in real estate, what do you have? Like the Blackstones, right?
Right.
So now they bought when you bought.
It's all volume.
Right, 2010, and now they're actually creating the new rentals, right? So
totally.
And now they're all landlords.
100,000 homes or 200,000 homes they own or something stupid like that.
Yeah, right.
Yeah. But you bet they're going to be selling it too. And then moving on to the next opportunity.
Exactly. And so, of course, there's always people making money, and it's the laws of large numbers. And so it just, to your point, it creates a greater separation between those that have and those that don't. Because if I had $1 billion of cash that I wanted to put to work in a stable investment, I might buy real estate because I would want to generate yield off that.
Right.
But and a lot of these guys don't subject themselves to interest rate risk, or they hedge it. They have some internal hedge because they're buying someplace else overseas with different correlations to the dollar. I mean, it becomes ridiculously complicated, where the average investor just doesn't want to
That hassle.
deal with that or even understand it.
Right.
And so I agree.
But okay, so but then
there's a house for sale in the Highlands that's the guy put $34 million into it and it's for sale for $16 million. I got an update on it. That's literally a fortified bunker, so we can all buy that. So when it all
Nice.
when the zombie apocalypse comes.
So if I may, because I'm the eternal optimist. So I mean, we have Trump, right? So he's like a real estate and finance guy. He's going to save us all, right?
All right, Ron, ease down, buddy.
My philosophy is the greatest freedom in life is when you don't have to rely on anyone but yourself.
Of course.
And so anyone that looks to the government for answers, I always say if people are out there worried about what the government is doing in their healthcare, maybe they need to ask the question, why is government in healthcare? Or who they can marry. You have to ask, why is the government in the marriage business? Or what I can put on my own property. What is government? Or we'll even go here because we're in California, a legally, naturally growing plant. Why is that not allowed on my property? And so you kind of have to look at these things and say, who are the interested parties and what are the economic benefits of creating this regression or repression of certain ideas, or to your point, making an environment that's difficult for the common, hard, blue-collar worker that built this country, the middle class. Why aren't they getting ahead? Because wages are stagnant, cost of everything is increased, and we live in, unfortunately, a consumeristic economy where people are bombarded every day to buy this freaking phone I have, or these ridiculous glasses, or whatever it is that costs more money than I should be spending on those things.
So let's say I have a little bit of income that it's at the end of the day, I'm in the black. And I got to put it, and I like real estate.
Yeah.
I just, it's just something that I understand, what is it if you're I don't know, but I was gonna say something incredibly brilliant. Let's put that in a cut. Put the brilliant thing in there. Okay, no, but no, that's what I understand. What would you do? What would you be doing right now?
So what I would do if I wanted to buy real estate.
And Dave, just pretend that you now you've landed in Los Angeles. Like, would you?
And by the way, that's a very interesting distinction. By the way, Atlanta is a completely different market.
Because $800,000 buys you a shed in Santa Monica.
Ironically, I know the guy that's built the $250 million spec house here.
Oh, yeah.
I know that guy.
Yeah.
I actually had dinner with him a couple years ago out here. But
a helipad.
Yeah, that you can't land on.
You can't land. It's got Airwolf.
It's got Airwolf on it.
They parked Airwolf on it.
That's true. It comes with $30 million of cars, though.
Airwolf.
He's a good guy. He really is.
Yeah.
That dude's an entrepreneur.
Yeah.
So what would I do? So here's the thing with real estate. If you can do the work to get in the path of progress, no matter what the market is, you can make money. So if you do the work and find out that, because of traffic, the new rail line is going to this part of the town in 4 years, and you're willing to get in there early, and you know that people love living in LA and the population is not going to decrease. People used to complain, I always joke about this, people used to complain about traffic in Detroit. Well, Detroit fixed that.
Not so much traffic.
You don't have to worry about Detroit traffic.
Right.
20% of the population leaves? Perfect.
You can just fly to the airport.
Yeah, exactly.
Right.
And so I don't think LA is going to have that problem.
Right.
So then you have to decide, okay, if we become a more urban kind of central transit area, where do you see those investments going from an infrastructure standpoint, and how can you start buying real estate in those? And then you have to then look at that real estate and say, do I have the cash flow to hold on to it, to wait it through? Can that piece of real estate generate enough cash flow to help me finance it for this time? And then what do I forecast that appreciation to be over a course of time? factor that into my return, do an internal rate of return calculation with the time value of money. Now I'm pulling out the business school stuff, and back it down into what your rate of return is. And is that something that based on that rate of return, you're willing to do that work and risk for, or do you just want, because you think it's going to crash, go out, buy some Bitcoin and some gold and some bullets and think that you're going to hedge it that way with your extra money? I mean, there's many ways to skin the cat. The beauty of real estate, and the reason I got into it, is I wanted to go visit something. I wanted to see it. It makes me feel good.
But I think it'll feel the same way. I mean, it's such a kind of visceral, that's mine. I point at it and I go, that's mine. Yeah.
Exactly. And there's something awesome. I think there's something almost evolutionarily about it.
Right.
Of owning land, of owning shelter that makes you feel good. Now, it comes with strings, but there is no doubt, and I'm literally making up the stat, but probably the greatest wealth in the history of America cumulatively has been made in real estate.
Yeah.
And so it's a long man's game. It's a get rich slow game.
You have to be patient.
Yeah. And so when you get these infomercials of people blowing up their Ferrari because they can blow up their Ferrari because I just made so much money in real estate, I'd like to think I'm not, I might not be the sharpest knife in the drawer, but I'm not the dullest, and I haven't figured out how to blow up a Ferrari yet and feel good about it. So,
yeah, that's a very quick, fleeting feel good.
Exactly.
So, any last things that you think that would be like, if you were talking to yourself, before you did this, but it's now, what would you be telling you? And by the way, be honest. If you think that it's not the time to go,
so what I would have done. Here's what I would have done differently in the crash environment. I still bought a tremendous amount of assets in kind of speculative areas, even when the prices were low. But guess what? I could have bought, and I almost did, and I kicked myself. I could have bought $1 million house for $400,000. And it would have taken more of the powder that I had, that I wanted, and it just seemed exceptionally, but the house sells for $1.2 million right now. And so I could have made a tremendous amount of return. And so I didn't focus on, at the time, the quality of the area as much and the quality of the school systems. I didn't have a good enough appreciation for it back then because I was a lot younger.
Let me just say, and we've had an episode about this, people so completely underestimate that. And even when I'm just like working an open house or something like that, it's almost the first question out of everybody's mouth. Now, what school is this? What school is this? And it's insanity.
And I could have bought into awesome school systems for less than half of what they're selling for today.
So is that kind of your kind of sweet spot of what you look for?
Now, if I was, but the lesson learned is because I could accumulate so much in these really speculative areas, I could just get the volume. But, I would rather, so let's say I'm buying 20 toilets to worry about. I'd rather buy one house with 7 toilets and maybe get the same amount of return.
Right.
But it's a little scarier hold, right? Because you put more of your eggs in that basket. But you kind of have to have faith back to that a certain school district or a certain area has stood the test of time in that community. And so I think...
right side of the tracks.
Yeah, the right side of the tracks, exactly. But when you're in a market like we are now, the speculative areas that I invested, because of the price points of those other areas, have forced those people to start looking in those more speculative areas, which then raises the value of everything around it. So it's good there too.
Right.
And so, I think I will still say, I think it's tough to be a real estate investor right now, especially if you have a variable rate. I wouldn't do anything with a variable rate, if at all possible. I used to think it was an old Chinese blessing because I used to say it on my podcast, may you live in interesting times. But I found out it's actually a Chinese curse.
No.
So I think we are going to be living in interesting times.
I think it's going to be very interesting.
I think the past 6 months have been very interesting.
Well, David, thank you so much for coming. I mean, really, I do appreciate some amazing, amazing advice and information. I really appreciate it.
My pleasure.
Let's talk a little, just before we go, I want to talk about, you have a book that you've written. Can people find it? It's on
Amazon.
And it's called?
I Can Fix America. 52 Common Sense Ways You Can Make the United States Great Again. So someone took my tagline. He changed it from United States to America.
America. Yeah. He saw it, and then he played it. He put on red hats.
2012, exactly. And so it's just a fun little coffee table book. I call it the anti-bitching book. It's everything that everyone complains about in America, but it actually gives you stuff to do.
Great.
To get it done.
Like little activities.
And I'll even plug my podcast mate, Rob Wolf, and that name's could be way more familiar than mine, but he's kind of the godfather of the paleo world, and his new book came out yesterday. It's called Wired to Eat. So
great. Well,
he's a big thought leader, so you can go out and get that done too.
Well, thank you so much for coming. I really appreciate it, David.
Of course.
Really. All right, great. Well, that's about it for today. If you have any questions or comments, please don't hesitate to leave them for us on our Facebook page, facebook.com/Clarified Realty Broadcast, all one word. Like I said before, you can email me directly at tom@clarifiedrealty.com. For more exclusive bonus content and advice between episodes, please check out our website, www.clarifiedrealty.com. Also on our homepage, you'll find links to helpful buyer and seller guides that can give you some great information for starting your home buying or home seller process. So definitely check those out. I'm on Snapchat, Twitter, and Instagram as well. My handle for all three of those is @ClarifiedRealty. I beg of you, come on guys, please leave feedback. Where are you guys? And reviews on iTunes or in the comment section on our page. My amazing theme song is Hey Now. It's from the band Wolf. That's Wolf with 2 Fs. And please go check them out and like them on SoundCloud. We'll also leave a link to the song in the credits if you can. They rock so hard. Buying all their albums is always a good investment. And just a little disclaimer, Ron and I are licensed by the California Bureau of Real Estate. My license number is 01715353. Ron's is?
Guarantee rate NMLS 2611 558706 California.
Forgot it there for a second. The advice we give is only for properties located in the state of California. For all other states, please contact your local real estate agent or real estate professional. That's about it, Ron. Dave, you good?
Good.
We're all good. All right.
Yeah,
well, thanks for coming.
Dreaming.
Well, thanks for coming, everybody. Remember, the greatest thing you can ever do is make someone feel at home. Take care. We'll see you next week.